On the fractionalizations, you talked about basically you're globalizing a local asset by the secondary market. I mean,
Yeah,
there's still going to be SEC requirements,
yeah,
depending on how these things are structured. But once that timeline, take a 506C for an example, you have to be an accredited investor to participate. But after
in
12
the
months,
U.S.
in the U.S.
Yeah,
But after 12 months, that security can be sold, and don't take any of this as legal advice. But
right.
but at that point, when you have a liquid secondary market like blockchain can offer, and platforms as they're developed can offer, now you have a global pool of investors, as opposed to right now, you kind of have to know someone.
Yeah.
Unless you're going on some of these like what is it, Realty Mogul and
Hmm.
some of the crowdfunding platforms. Basically, you have to know someone, but now you don't,
Right.
and you can participate in the Sears Tower in New York and buy your 0.005% of it, but New York City has a huge boom over a 10-year period. And hey, I mean, you get the cash flow along that time period. You just had to sell it in 18 months,
Yeah.
take your equity, go out and do whatever you want with it. Um,
Yeah.
do you think as that evolves, it creates a risk in the near term of a potential bubble, and not to get you to speculate, but that maybe investors should watch out for that?
Yeah, I mean, that's with anything. I mean, you're seeing it with some of the coins, you're seeing it with NFTs, and I think it's going to depend on how fast we adopt the currencies, right, or the tokens. If we get a slow adoption of tokens and there's not a mass influx of money, you won't see that happen. But if everyone catches it and it gets a lot of publicity, and there's a lot of people that are rushing to the space, and there's not a lot of product that's available, a lot of product that hasn't been tokenized, then I think then you could see bubbles form. We already know there's going to be some cap rate compression. Uh, you could see mass fluctuations in that. The one good thing that you have when it's with real estate versus with other assets is if you're buying into a cash flowing asset, that cash flowing asset's still going to be there. A lot of this other stuff, it's
Yeah,
kind of like,
Dogecoin doesn't have intrinsic value. Uh,
yeah,
the
it's
300
the
unit
network.
apartment complex, like people still live there and they're paying rent.
Yeah. Well, even think about publicly traded companies. You go into the stock exchange and you can go buy a publicly traded company. Well, how many booms and busts have we seen in the stock market where, what was it? WorldCom was a hundred and something billion-dollar bankruptcy, and Enron and all these other companies. The you can have a bad operator on some real estate, but also usually built into those partnerships is, what do we do when there's a bad operator? Can we remove that operator? The building's still there. There's cash flows still there. Something happens to the building, storm, fire, something like that. We got insurance. That's the thing about real estate is we can even out, smooth out a lot of those rough spots that you might see in the other market. And when's the last time an apartment complex spiked 400% in value overnight and then dropped, 50% the next day? Doesn't really happen. I mean, there's a couple
No.
houses down the street that probably sold for 100 grand more than I thought they should have, but that was short lived in a boom, you
Yeah.
know. So yeah, I think like I said, if you have a limited amount of product and you get a lot of hype in the space early on, I think you could get a lot of money rushing in, but that's going to depend on the structure of the deal too. Because um, if you don't have it set up to receive overseas money, if you don't have a Reg A, Reg A plus, Reg CF, some of those things, you may be limited. Some of the governing documents from the transaction could limit, the buy-in size. So you probably have a few things that could help, prevent those fluctuations. But at the same time, look at the NFTs. Most of the people buying them, if you're paying $1 million for something, you got the money, so you're going to qualify for all those things if you're a wealthy investor. So we'll see how that shakes out.